Decentralized exchanges, DEXs, are at the heart of the DeFi revolution, offering users a platform to trade cryptocurrencies and tokens directly without centralized control. In this chapter, we explore how DEXs work, focusing on leading platforms like Uniswap and SushiSwap and their transformative impact on the decentralized finance ecosystem. Understanding decentralized exchanges. Decentralized exchanges function by eliminating the need for a central authority to manage transactions. They rely on blockchain technology to facilitate peer-to-peer trading, offering several benefits over traditional centralized exchanges. Peer-to-peer trading. On a DEX, users trade directly with one another, with smart contracts automating the process. This decentralized peer-to-peer model ensures that users maintain control over their funds at all times during the transaction, reducing the risk of hacks or mismanagement by a centralized entity. Smart contracts. At the core of DEX functionality are smart contracts, self-executing agreements stored on the blockchain. These contracts manage the entire trading process, from matching buy and sell orders to executing trades and distributing funds. Smart contracts ensure a seamless, trustless trading experience. Liquidity pools. Unlike centralized exchanges that rely on order books, DEXs often use liquidity pools. Users deposit their tokens into these pools, which are then used to facilitate trades. Liquidity providers earn a share of the trading fees generated by the pool, creating incentives for participation and ensuring continuous liquidity for trading pairs. Uniswap, pioneering automated market makers, AMMs. Uniswap is a pioneering decentralized exchange that has popularized the automated market maker AMM model, revolutionizing how liquidity is handled. Automated market makers, AMMs. Instead of using an order book to match buyers and sellers, Uniswap employs an AMM system, where prices are determined by an algorithm based on the ratio of tokens in a liquidity pool. This model ensures that trades can always be executed, even without a direct counterparty. Over time, Uniswap has introduced major upgrades. Uniswap 5.2 added features like direct token swaps and improved liquidity options, while Uniswap 5.3 took it further by introducing concentrated liquidity, allowing providers to allocate capital within specific price ranges, boosting capital efficiency. Governance and tokenomics. Governance in Uniswap is driven by its native UNI token. Uni holders have the power to vote on protocol upgrades and other governance decisions, ensuring a decentralized approach to platform development. Tokenomics align incentives for liquidity providers and users, further enriching the ecosystem. SushiSwap, expanding the DeFi frontier. SushiSwap, initially launched as a fork of Uniswap, has grown into a significant player in the DeFi world, introducing its own set of innovations and community-driven governance. Community governance. SushiSwap places strong emphasis on decentralized governance, with its native token, Sushi, playing a central role. Sushi holders vote on governance proposals and earn rewards for providing liquidity. This focus on community involvement has fostered a strong, engaged user base. SushiSwap features. SushiSwap enhances the AMM model with additional features like yield farming and staking. Users can stake their Sushi tokens to earn rewards and participate in the platform's governance. Furthermore, SushiSwap has introduced leveraged trading and lending, expanding its services beyond traditional DEX functionality. Cross-chain compatibility. SushiSwap's cross-chain capabilities allow it to operate on multiple blockchain networks, including Binance Smart Chain and Polygon. This cross-chain functionality broadens its accessibility, enabling users to trade assets across different blockchain ecosystems. The impact of DEX on the DeFi ecosystem. Decentralized exchanges have fundamentally transformed the DeFi landscape, providing users with greater autonomy and access to financial services. Enhanced liquidity. DEXs have introduced innovative liquidity mechanisms like AMMs and liquidity pools, which have boosted market liquidity while reducing reliance on centralized liquidity providers. Lower fees and greater efficiency. By removing intermediaries, DEXs offer users lower transaction fees and faster trade execution, making them more efficient than traditional centralized exchanges. Increased accessibility. DEXs offer access to a wider range of tokens and financial products, including those that may not be available on centralized exchanges. This openness democratizes trading and fosters continuous innovation within the DeFi space. Despite the many benefits of decentralized exchanges, DEXs, and lending platforms within the DeFi ecosystem, they also face significant challenges such as security vulnerabilities, scalability issues, and regulatory uncertainty. This section will explore these challenges, how they're being addressed, and the role of stablecoins in maintaining financial stability within DeFi. Challenges facing decentralized exchanges. DXs. Security concerns. While DEXs eliminate intermediaries, they are not immune to security risks. Vulnerabilities in smart contracts can be exploited, leading to potential loss of funds. Regular auditing and innovations in security protocols are essential to build trust and safeguard users. Scalability issues. Scalability is a major concern for DEXs, especially on networks like Ethereum, where congestion and high gas fees can slow down transactions. Layer 2 solutions, such as rollups and cross-chain interoperability, are being explored to address these bottlenecks and improve transaction throughput. Regulatory uncertainty. Governments and regulatory bodies are beginning to scrutinize the DeFi space, especially given its lack of centralized control. The future of DEX will depend on finding a balance between maintaining decentralization and complying with emerging regulatory frameworks. The future of DEX. The future of DEX will likely see advancements in several key areas. Improved user interfaces. As user adoption increases, improving the user experience will be critical. Simplified interfaces that cater to non-technical users will encourage broader participation in decentralized finance. Cross-chain interoperability. Interoperability across multiple blockchains will allow users to trade assets seamlessly across different ecosystems, enhancing liquidity and reducing fragmentation in the DeFi space. Enhanced security measures. Ongoing innovations in cryptography, smart contract auditing, and decentralized insurance mechanisms will enhance security and mitigate the risks associated with decentralized exchanges. Lending and borrowing platforms in DeFi. DeFi lending and borrowing platforms represent a decentralized alternative to traditional banking services. By leveraging blockchain technology, platforms like Aave and Compound allow users to lend or borrow assets without intermediaries, providing greater accessibility and transparency. Lending. Users deposit their assets into liquidity pools to earn interest. The interest rates are determined by supply and demand within the platform, ensuring that the returns reflect market conditions. Borrowing. To borrow assets, users must provide collateral, which is secured through smart contracts. If the value of the collateral falls below a certain threshold, it can be liquidated to cover the loan, ensuring the system's solvency.